Did you know that the global insurance industry is a multi-trillion-dollar industry? Yes, you heard that right. This immense sector stretches across continents and oceans, touching every corner of our modern world. The insurance industry is a key player in the global economy. It's not just about providing a safety net for individuals and businesses, although that's an important part of what it does. The industry's reach extends far beyond that, into realms you might not expect. Imagine a world without insurance. It would be a place where risks are higher, where businesses fear to innovate, and where personal calamities could easily turn into financial ruin. The insurance industry exists to prevent this kind of world. It's here to manage risk, to offer security, and to create a buffer against the unexpected. At the heart of this mighty industry, you'll find the top insurance companies. These aren't just any companies. They are the titans of the trade, the ones who set the standards and shape the trends. They are the ones who bear the responsibility of insuring billions of lives and countless assets around the globe. These top insurance companies contribute significantly to the multi-trillion-dollar insurance industry. They are the ones who handle the lion's share of the policies, the premiums, and yes, the payouts. They are the ones who have the power to influence industry-wide practices and to steer the direction of the insurance world. But how do these top insurance companies make their mark? How do they generate the revenue that keeps them at the top of the game? The answer isn't as simple as you might think. It's not just about selling policies and collecting premiums. There's much more to it than that. From innovative product offerings to strategic investments, from customer service to risk management, these top insurance companies employ a range of strategies to stay ahead. They navigate the complexities of the global market, adapt to changing customer needs, and seize opportunities for growth. So let's delve deeper and understand how these top insurance companies generate their revenue. A primary source of income for insurance companies is premiums. Now you might be wondering, what exactly are these premiums? Well, simply put, they are the amounts charged by insurance companies for the coverage they provide. This could be for your health, your car, your home, or even your life. Calculating these premiums is a complex task. It involves assessing the risk associated with insuring an individual or entity, and then setting a price that both covers that risk and allows the insurance company to turn a profit. Actuaries, the number-crunching wizards of the insurance world, are the ones who carry out this task. They use statistical models and financial theories to predict future claims based on various risk factors. Now, let's delve into the different types of insurance policies that generate premiums. First off, we have life insurance. This is a long-term policy where premiums are typically paid for many years, even decades. The premiums for such policies are generally lower, but since they're paid over a long period, they add up to a substantial amount. Next, we have health and auto insurance. These policies are typically renewed annually, and their premiums are largely dependent on individual risk factors. For instance, a person with a pre-existing health condition might pay higher health insurance premiums. Similarly, a person with a history of car accidents might have to shell out more for auto insurance premiums. Lastly, we have property insurance. This type of insurance covers homes, commercial buildings, and other physical structures. The premiums here are determined based on the value of the property and the potential risks it faces, such as natural disasters or theft. These premiums are an essential lifeline for insurance companies. They form the bulk of their revenue and are used to pay out claims, manage operations, and, importantly, generate profits. The collected premiums that aren't immediately required for paying out claims are often invested wisely to generate additional income. But premiums aren't the only way insurance companies make money. There's another key player in the game, and that is investment income. So let's take a closer look at that in the next scene. Insurance companies are major players in the investment world. Now that might seem like a surprising statement, but when you think about it, it makes perfect sense. After all, insurance companies are in the business of risk management, and what is investing if not managing risk for a potential return? Here's how it works. When you pay your insurance premiums, they don't just sit in a vault somewhere waiting for claims to be made. Instead, these premiums are pooled together and invested by the insurance company. This is a vital part of their business model, and it's called float. Float is essentially the money that insurance companies hold between the time they collect premiums and the time they pay out claims. This money is not static, it's put to work. Insurance companies invest the float in a diverse portfolio of assets, including bonds, stocks, real estate, and other investment vehicles. These investments provide a return, contributing to the revenue of the insurance company. It's a bit like a second stream of income running parallel to the revenue generated from premiums. But it's not just about making money. Investment income also helps insurance companies to offset the risk inherent in their business model. You see, insurance is all about balancing risk. The company takes on the risk of potential future claims in exchange for your premium payments, but those future claims are uncertain. They might be more than expected, or they might be less. By investing the premiums, insurance companies can earn a return, which helps to cushion against the uncertainty of future claims. So, the next time you pay your insurance premium, remember that your money doesn't just sit idle. It's invested, generating income for the insurance company. This is a crucial part of how insurance companies generate revenue and manage risk. Now that we've understood how insurance companies generate revenue, let's compare and contrast the revenue generation methods of some top insurance companies. Different insurance companies, different strategies. Moving along, let's place the top insurance companies side by side. It's quite fascinating to see how their revenue generation strategies vary, and yet, in a sense, are also similar. Let's dive into this intriguing world of strategies that make these insurance giants successful. Take, for instance, Company A. They're known for their focus on premiums. They've built a strong reputation for offering comprehensive coverage at competitive rates. This strategy pulls in a vast pool of customers, ensuring a steady stream of premium income. It's like a well-oiled machine, churning out revenue consistently. Now, let's shift our gaze to Company B. They take a slightly different route. While premiums are indeed a significant part of their revenue, they also place a great emphasis on investment income. They have a knack for investing wisely, turning those premium dollars into a profitable return. It's a bit like a game of chess, where they make calculated moves to ensure a victorious outcome. And then there's Company C. They've carved a niche for themselves with their innovative approach to customer service. They've realized that a satisfied customer isn't just a source of steady premiums, but can also become a powerful advocate for the company. This results in new customers and, consequently, increased revenue. It's a brilliant strategy, really, turning customers into ambassadors of their brand. Despite these differences, there's a common thread that ties these companies together: their unrelenting focus on the customer. Whether it's through competitive premiums, wise investments, or excellent customer service, they all strive to meet and exceed their customers' expectations. This customer-centric approach is the secret sauce to their successful revenue generation. To sum it up, different strategies indeed, but all with a singular focus: to generate revenue and ensure customer satisfaction. It's a delicate balance, but these insurance giants seem to have mastered the art. Now that we've compared these insurance giants, let's summarize what we've learned. From premiums to investments, the insurance industry is a complex machine. The past few minutes have been a deep dive into the intricacies of how insurance companies generate their revenue and how they treat customers. If you are feeling a tad overwhelmed, don't worry. Let's take a moment to recap the key points. We began our journey by uncovering the multi-layered world of the insurance industry. It's a fascinating ecosystem, where companies navigate through a blend of risk and reward. The primary source of their revenue, as we've learned, is the premiums collected from policyholders. These are the payments you and I make to the insurance company to keep our policies active. But that's not the only way these companies make money. They also generate significant income from investments. When you pay your premium, the insurance company doesn't just stash that money away in a vault. Instead, it invests that money in a variety of assets, hoping to earn a return. This is known as investment income. We also compared some top insurance companies and discovered that while their core revenue generation methods are quite similar, Each has its unique approach. Some might focus more on earning from premiums, while others might lean towards earning from investments. What's crucial to remember is that these companies are not just about making money, they are also committed to serving their customers. The way they treat their policyholders, the products they offer, and their approach to handling claims are all part of their business model. In closing, understanding the insurance industry and its revenue generation methods is key to understanding how these companies operate and how they can serve you as a customer. So next time you're considering an insurance policy, remember these insights. They could make all the difference in choosing the right company and policy for your needs. Remember, understanding the insurance industry and its revenue generation methods is key to understanding how these companies operate and how they can serve you as a customer.